Hello everyone, this is Erica Slayton, Wallach & Volk Mortgage, and welcome to Thirsty Thursdays. So today is the day that I decided to come up with just a cool series about a thirst for knowledge of specific issues and guidelines and just kind of quirky things that come up in the mortgage business to help with real estate agents and consumers in their home buying and home loan process. So just to kind of show you one of the guideline books that we use as a summary, keep in mind this is a summary, is a quick reference guide. And quick reference guides are amazing because, the FHA guidelines, for example, are over 800 pages long. So as you can imagine, it gets pretty daunting. So this particular summary book is 232 pages. It gets updated quarterly for me. So it's super helpful and handy for me to have. But it is just that. It's a summary. It's like a cliff notes of the 800 plus page guidelines for just the FHA loan program, not even including VA or conventional or anything else like that. So a situation came up recently in the office, and I thought maybe, this is a perfect opportunity for a Thirsty Thursday video. So we had a situation with a client who had been out of work for a period of time because of a family emergency. And so when I say out of work, I mean more than 60 days out of work. This particular person was out of work a little over 10 months. And so, you're thinking, well, it's like write up a letter of explanation, explain what happened and move about your day. But unfortunately, it's not quite that simple. And so this was an FHA loan. So therefore, we're going to be focusing on the FHA guidelines in this video. So in this particular situation, we have to prove before the gap started that this person had been on their job for 2 years. So any job counts, but as long as I can verify employment for 2 years total before the gap of employment, that's the most important part to start with. Now there's a couple of other ands in there. So I wanted to throw this out there again, just to kind of educate. So after they return back to work, we have to prove that this person has now been on that same job for 6 months. Not necessarily the same job as before the gap, but the same job for 6 months. What this means is that you can't go to work for, say, HEB and then go to work for Walgreens in that 6 months period and count it as one job for 6 months, because it's not. So if you're returning to work and say you go to work for HEB, you have to be to work with HEB for 6 months before we can consider that to be stable and qualifying income. Now, the other part, the other and in the guidelines, is that not only do we have to have an explanation of the gap, the 2 years before the gap of employment, the 6 months on the same job after the gap, we also have to have that 6 months at the time of contract being written. So that's really super important, because with FHA loans, there's a case number that's tied to the contract address. And so we have to assign a case number to that borrower and to that property. And it specifically states in the guidelines that it has to be 6 months at the time of case number assignment. So if you were 6 months on the job in 5 days from now, the 29th of May, 2018, and it's the 24th, I cannot assign that case number or order that appraisal until that 6 month mark, which would be the 29th, preferably the 30th, just because I like to play it safe by a day. So it's really important to understand all the little nuances that are involved in lending. Make sure that you have the right team on your side to check all these little details. And unfortunately, accidents do happen, issues do come up, guidelines get missed. So it's really, really important for everybody to understand that that's one of the reasons why I started Thirsty Thursdays, is to try to help educate on the process and those little quirks that occur from now and then. So make it a great Thursday. Have a fantastic Memorial Day weekend. We'll talk to you soon.